Gold and silver both just broke historic records. But could their run be coming to a sharp end? A surprising pattern may tell us where the money is going to flow next, and it's not where everyone is looking. Plus, something big is brewing behind the scenes. The United States, Wall Street, and global wealth managers are all quietly moving into the crypto space. We're connecting the dots you haven't seen before. Also, a new DeFi protocol that has been consistently yielding 225% APY. I'll show you the numbers from my current DeFi strategy and share how you can potentially get in the game too. And finally, is the 4-year crypto cycle dead? The Binance founder just went on CNBC with a bold claim, and that claim could flip everything you thought you knew about market timing. All of this and more on Around the Block, the crypto news show that keeps you up to date so you can stay ahead of the market. And real quick, I just want to say this is not financial advice, it's for education purposes only. Let's dive in. Let's start off with the precious metals. Gold and silver both hitting all-time highs, and boomers around the world are celebrating. While this may seem bullish, gold and silver rising at this rate is not sustainable in my opinion. This is a classic parabola, and parabolas never end well. Just take a look at gold. This is a parabola for nearly 28 straight months. Bitcoin has done very well in comparison to gold for a long time until about a year or so ago, when gold went on a run and Bitcoin basically stayed flat. Now, if we look back throughout history, gold and silver have been around for a long time. This is the silver chart. We have had two massive spikes in silver's value previous to this one. The first one was back in 1980, where silver rallied to nearly $50 an ounce. Over the coming years, it would crash by nearly 90%. Fast forward to 2011, silver had another parabolic move, only to come crashing down about 80% from the high. And take a look at where we are now in 2026. The likelihood that this parabola collapses, in my opinion, is extremely high. The question is when. Now, gold decoupling from Bitcoin could be a variety of factors. I think one of the biggest ones is that the more traditional old school investors are fleeing to what they believe is a scarce hard asset in times of uncertainty. While Bitcoin doesn't have the track record, it has way more scarcity than gold because it has a programmed limit. China actually just found another gold deposit worth over $86 billion. Good luck finding more Bitcoin. I personally believe it's just a matter of time until we see a rotation of this money from gold into Bitcoin. And I'm not the only one who thinks so. I'm hearing this all around the ecosystem. Now, that said, if everyone's saying something, it doesn't mean it's necessarily true, but like most assets, they'll eventually run out of gas. And when people think something's topped, they'll look for the next thing that is at a discounted price. I believe they will see Bitcoin as that opportunity. Now, it's key to use both on-chain and off-chain metrics to see what's happening with Bitcoin behind the scenes. What we're looking at here is the total whale holdings and the monthly change percentage. You can see these whales are starting to accumulate Bitcoin at these levels. I personally have found it very helpful to see what the smart money is buying because they are in the business of making money and they don't panic, they don't FOMO in. So because of that, following them can often, not always, be a good thing. And they're not the only ones doubling down in the crypto space. We've got the $7 trillion UBS to offer Bitcoin and crypto trading to its private clients. Every day, we're seeing more mainstream financial giants get into the crypto space. We also just saw that the NASDAQ removed the Bitcoin and Ethereum ETF option limits. There is so much demand for these options, so they don't want to have limits anymore, which is just showing how much interest there is in this space. We also have another big TradFi player getting in the game. Capital One is going to acquire stablecoin fintech Brex for $5.15 billion. Likely they are preparing for the crypto market structure bill to pass, and they see the opportunity to own a stablecoin company that can generate yield for them consistently. Now let's talk about decentralized finance liquidity pools. Might sound like a mouthful if you're not familiar with the term, but it basically gives you the ability to earn yield by providing liquidity for other people to make trades with. Now, I have some other videos on that if you want to take a look so you can understand it in more depth, but I want to show you the type of results I'm getting here. So here's an example of a pool that I'm in. You can see currently the principal is worth about $3,904. And I also have about $40 in claimable yield. Think of that as the dividend. Now let me show you how this all breaks down. So my initial deposit was $4,000. Currently, it's a little over $3,900. The reason is because the market went down. So what happens is you're exposed to these assets, so I'm taking on some of that loss. However, I'm also earning yield because I'm providing a service. People are using the liquidity to swap between two assets. and I'm paid a fee just like Visa or MasterCard is paid a fee on every transaction. And you can see I've been averaging a little over $25 a day in real yield. So although the assets are slightly down, I'm actually significantly up in a short time horizon because I'm earning such significant yield every day. Now, if you see here, the total earnings for about a 2-week time frame are near $360. That means at the current rate, this is paying me over $700 a month dividend, which translates to about 234% annually. DeFi is truly one of my favorite ways to make money in crypto. And if this is interesting to you and you want to learn how you can harness the power of DeFi, you want to increase your crypto knowledge, get real-time trade alerts, and even whale wallet tracking, then I recommend checking out our Blockchain Boardroom Alpha Hub, where you can learn all of this and much more. And for a limited time, it's literally 90% off. Just scroll down the description of this video and you'll see a link to sign up. All right, let's get back to the video. Now let's talk about one of the most famous people in crypto, CZ, the founder of Binance. He has been more outspoken lately than I've ever heard him. Traditionally, everyone believed the 4-year cycle controlled the flow of money and the price of Bitcoin. But the Binance founder was just on CNBC explaining his thoughts for what happens in 2026. Let's listen in.
If you look at a 10-year horizon, it's very easy to predict. We're going to go up. If you look at a 1-year horizon, which is like what the most of the common right. Framework is, 2026, I'm not sure. I think I have very strong feelings that it will probably be a super cycle.
Be a super cycle?
2026, yeah.
For Bitcoin?
For Bitcoin.
And what super cycle to you means what?
Well, normally Bitcoin follows 4-year cycles historically. If you look at historic data, like every 4 years, there's a all-time high and then there's a drop. But I think this year, given the U.S. being so pro-crypto and every other country is kind of following, I do think we will see this. We will probably break the 4-year right. cycle. Yeah.
Now, while no one knows for sure, CZ is a big name in the space, and he has not always said such bullish comments about the price of Bitcoin. In fact, he's kept that pretty close to the vest. So the question is he right, or are we about to enter the bear market? Now, on one hand, it's very easy to look at a chart like this and say, this is playing out exactly the way the 4-year cycle always has. We are going lower after making a new all-time high in that 4th year. And now we're going to reset the cycle, and let's see what happens next. Typically, the price goes down. But there's another school of thought that I've heard floating around, which is that the 4-year cycle was coincidental, and it lined up perfectly for a long time with the business cycle. If we look at this chart that shows the 4-year cycle, we can see that it actually lined up perfectly with the peak of the business cycle. That has happened in every cycle before this, but this time, things are different. This time, we actually have the business cycle about to break to the upside. So if this is the true correlation that matters, we will see Bitcoin hit all-time highs in 2026. Now, personally, I do believe we will see an all-time high in 2026, barring one of a few major things happening. For example, if there is World War III or some black swan event, I don't think we will see that happen. But barring some type of event like that, I think we move higher and higher, and this could be the opportunity to accumulate Bitcoin way under its fair market value. Now, if you want more tips and strategies like this, don't forget to scroll down to the link below and join the Blockchain Boardroom Alpha Hub. And even if you don't do that, make sure to like and subscribe because we'll be dropping more alpha and information so you can stay ahead in the crypto market.